Hey traders, welcome to Charts and Coffee for Tuesday, December 2/8, winding down the year. Great to see everybody. All right, so let's get to it. We have a pretty exciting week underway, one that a lot of us were expecting Santa to show up, and show up he has. So take a look at what we're I mean the current candle. We're still 29 minutes before the bell. It looks like we'll have a very minor gap up, not simply because we have opened above the previous session close, but that we also at the moment, if I zoom in just a little bit more, you'll see that we're just north, barely north of the high. And to open above both the previous session high and close would be considered a true gap and might be a little bit more fadeable. Now, I don't want to be a short seller, although we know there's that tendency to want to fade a gap up. But at the end of the day, that weakness, if we were to see it, could set up for some interesting intraday setups. And that's what I'm looking for. I'm looking for a little bit of weakness that I can buy, right? So let's see how that plays out. All right. So of course, as always, show's about your questions. Let's jump into our first question. Hey there, Hobo Historian. Broad question. Okay. I do not want to chase the rally here. Me neither. I'm with you there. But I'm not sure about seasonality, looking for shorts in a bull market. I don't know who would want to do that, right? So we don't want to short uptrends, but there are certain markets that are not in uptrends. If you're looking for a short, should I be looking for weak names for a market pullback? So there's a couple ways you can do this, Hobo Historian. If you want to short a rip, right, find a downtrend, find an overbought market where the preceding trend was down, right, and then if not, this may not be a popular answer, but it's the truest answer throughout my career. If you don't get a trade this week, so what? Right? If you don't find a setup that meets your criteria, so what? If you find yourself having to wait for the new year, that's fine. And I think that the idea that it's okay to be flat, and the idea that it's okay sometimes to not have a position, even though there might be a quote unquote big move. Here's the danger. If we wander away from our set strategies, our setups, and we start just getting in because we just sort of feel the market's going to keep going, that's an unreplicable approach. It's not something that we can just rinse and repeat. And I think that gets us into far more trouble because then the brain, oh, I'm getting voicemails here, sorry. It's Chewbacca. Boba Fett tomorrow. Cannot wait. The new series on Disney, Boba Fett. Looking very forward to that. Not as excited as I was about Matrix 4, but it's pretty high up there. So anyway, if we're looking at the way in which our setups are either allowing us to or not allowing us to get in the market, if we don't get it, we don't get it. Please don't force anything this time of year. And I really wouldn't prioritize shorts unless the trend that preceded the chop or the rip was down. So, but I think you're looking in the right direction. Just don't short strength, and I think you should be fine. Although that's never something we really want to do. So many traders have been undone, and experienced ones at that, thinking that they found a top. I never do that because it was basically taught to me very early in my career that it's a revenge trade, that this market has gone as high as it is, and this is the top. That's just a revenge trade. And it's a revenge trade for not already having been long. So great question. Thanks for that. Line Watcher, happy holidays. I appreciate that. Do I expect a pullback during the Santa rally? Oh, we just melt up from here. I don't know, my friend. Nobody does. Nobody does. So great question, though. How about this? If we get a pullback in double green markets, let's buy it. And if we don't and we melt up, kind of the same answer I gave Hobo Historian. We're winding down 2021, and it's been a pretty good year, as challenging as the markets have been. And then we get to start all over and try to do it even better in 2022. So I don't know, but if I get a pullback, great. If I don't, that's fine too. That's fine too. We've got to get comfortable as traders. And I say this to myself as much as I do anybody in our caffeinate and dominate crew. We've got to be okay with that just wasn't my move. Good for somebody else. It just wasn't mine. And the more comfortable you get with that, the better, the more peaceful and arguably profitable your career is going to be. So thanks for the questions, gang. All right, JR asks, is Amazon due for a big move? Let's go take a look. AMZN. All right, so is it due for a big move? Well, why? I guess that's the first question I'll ask. Why would it be due for a big move? What is it that's setting up? And then what would make me assume that it's not just going to be a bounce, say off an oversold level, versus a huge bounce? So bottom line is, JR, nobody knows. That's got to be the answer to so much when it's predictive in nature. Look, I know that people on podcasts and TV and any place with a microphone shoved in their face, their first inclination is to somehow suggest they know where the markets aren't going to go. And we know that's just not true. So I think there could be an interesting bullish move if we can hold the 200, but how big it's going to be? Is it due? Why? Why? I don't think so. There's nothing about Amazon that's been all year, frankly, impressive. Every now and then it's had some nice moves to the upside, but for the most part, it's been hugging the 200. And I'd be more bullish than I would be bearish, but there's nothing here to say that that could be the case. But I don't want to short it. How's that? How's that? For sure. I don't want to short it. And then JP Morgan, my thoughts on a JP Morgan short. Neat question, because JP Morgan is red over red. So great eye. Great eye. Short the rip. I don't have a problem with that. Just be aware that JP Morgan's part of two larger narratives. XLF, which isn't nearly as bearish as JP Morgan is, and the S&P, which frankly isn't bearish at all. So if you're looking at JP Morgan bearishly, it is not in sync with two of the larger pools of stock that it tends to move with: XLF, the financials, ETF, and the S&P, the broader index. It's still north of the 200, but it has pierced that 200 propulsion. So I think the path to the downside is probably a little clearer, but it could move with the broader tide, right? This boat, as big as it is still susceptible to strength in XLF and S&P. So I guess my recommendation is, if you're looking at JP Morgan and you're looking at the XLF, which has got to be part of the conversation, I would ask, is there anything that looks more like XLF? Is there anything within the XLF that's behaving better in sync with either the S&P or the XLF? And I think when you look, you'd probably find that there are a number of names that aren't in downtrends and could move more sympathetically with the broader average and with the bigger picture in terms of the ETF. So, but to your point, shorts on JP Morgan, that would be about all I'd be able to do, or rebuild a watch list of names that are reflective more of what's happening either in XLF or the S&P. And Chicago Merc, CME has been one of those names that's been an absolute relative outperformer within the XLF, and you can see what it's been doing. So there are names out there that look markedly different. So, let your watch list hopefully be a reflection of your overall opinion of that sector or that index, and try not to find names that are sort of exceptions to what's happening more broadly. So hope that helps. All right, next question. Good stuff, by the way. And TT asks, DLTR. Sure. All right. So gorgeous looking uptrend. Good eye. Love it. Buy the dip. Yep. I mean, that's how clear and clean and just straightforward a double green uptrend allows our setups to be. I mean, there's a reason most of us do best in an overall uptrend. Very few people do better in chop. Very few do better in downtrends. The overall market environment that's the most predictable and the most beneficial to the broadest group of market participants, they're uptrends. So why not seek them out? Because they're always going to exist. Sometimes it's in an ever receding pool of names, but they're always going to be out there because money's got to flow somewhere, right? It's got to flow somewhere. It doesn't go under the mattress. So sometimes it's harder to find those uptrends, and there's fewer of them. But this is a gorgeous one. Buy the dip. Absolutely. All right. Les. Oh, my pleasure, Les. And you look, I I wouldn't be sitting here talking to traders if it wasn't for you all showing up. So, thank you for you all spending time wanting to be better at trading and supporting each other in your pursuits. And I really, really appreciate. No, it's super kind of you. It's super kind of you. I thank you for everyone for your time, right? I mean, that's the most precious thing. Status on the oil short, Kevin. Oh, so I like the oil short. It's definitely running away from the zone that I thought would hold as resistance. So this is where I've just got to say I wanted selling pressure to come in. It simply hasn't. And so I have one of two choices. Pull the futures contract, which, this is a great opportunity to mention this, Kevin, because trades that don't go in our favor give us a great opportunity to understand scaling in and scaling out. So if I've scaled in, which I have in this area here, right? I've scaled in two ways. One, I've scaled in with USO, and I've scaled in with crude oil. And usually the first scale in is actually going to be options on either the futures contract or options on the ETF alternative. Those are going to be a percentage-based stop. The futures contract, whether that be CL, MCL, however you want to go, full-size crude or micro, that's going to be in the more moderate to conservative part of where I'm scaling in. But that's also going to be a dollar-based stop loss. So the USO puts, which I'm not really crazy about hanging on to, they're going to be able to withstand more than the crude oil futures will be able to withstand. A really good example of this was yesterday. We were doing a bonus session, and I wanted to buy the S&P on a pullback as we went into the last 2 hours of the day. Afternoon trading, not my jam. But I went through in that session the two criteria specifically, three really, that allowed us to even entertain the notion of a long position in that part of the day. And those criteria, all three of them were valid. So pullback came and we bought. And it pulled back a little bit more right in front of the bond market closing, which we can't be surprised, in front of 3 p.m. Eastern, a little bit more volatility. But nonetheless, because I got to stick with my discipline. Because unless I wanted to use the volatility of the bond close to buy more moderately or conservatively, I couldn't just hang on because I wanted to. I had to cut those futures contracts loose. But because I scale in, not only from an aggressive, moderate, or conservative zone, but that we break it up with different tools. In this case, not just the futures contracts, but also the options on the SPY. They were able to withstand that trough. And while I had to let go of the futures, which was a disappointment, the SPY more than made up for uh, that leg, that those particular contracts, those futures contracts getting stopped out. So it's not unusual in any of my trading, whether it be in the futures room, whether it be in the Sector Secrets Mastery, whether I'm in the options room with you all, for me to break up a trade across these different asset classes. So I'm pretty sure that this is probably not going to last, but we'll see. I still have my USO puts. The futures had to be cut. This it's not personal. It's not emotional. Disappointment, sure. I really like the setup, but that's the way it goes sometimes, right? All right, Microsoft, it's moving higher. It's coming off an oversold level. This is where I don't want to call it right or wrong. This is where you find out who you are as a trader. When you look at a non-trending market, but clearly with bullish bias, and even non-trending again, but clearly again, bullish bias, right? You want to be a buyer. So let's get the long side of the market clarified. I want to be a buyer or nothing. Okay. Now, what I mean by you find out who you are as a trader is what gets your attention? What kind of move gets your attention? Is it this candle? Is it maybe this candle? Is it this candle? Right? This is largely a momentum move. These two green candles. This is exhaustion. These particular candles almost never resonate with me. There's very little to nothing that in my mind I say, oh, I need to get in because it doesn't meet the criteria for me of the zone that I want to take advantage of. So first of all, I guess the question is, which candle got your attention? And it doesn't have to be any one of those three. Maybe it's a different one. But I think a lot of traders will get that candle gets their attention. I guess what I'm trying to say is if you already know you want to be a buyer, by the way, that's not a new decision at all, right? I mean, this has been since August, September, double green, double green. Even when it's neutral, we want to look for oversold buys, double green, oversold buy, double green, oversold. There's not been a single high probability short in Microsoft. There's been picking tops. And like broken clocks, those folks are right now and again. But if you look at the structure, it's definitely long. And if you know you want to be long, why not look at previous support and say, oh, isn't that just a double bottom? Isn't just an oversold support level that I can buy? Do I like oversold support? It's not my favorite way to trade, but I like it a whole lot better than buying markets on the way up, right? That's just me. So it's long or nothing, and that's been in place for a very long time. And then once we know it's long or nothing, then we got to ask ourselves, are we going to wait for a dip? Are we going to wait for an oversold support level? Or, for those traders that are momentum traders, which momentum breakouts then get you in? So I hope that helps. It's not that there's just one way to do it, but I'm just never going to buy new highs. That's just not what my strategy and my process, it doesn't even ping on the radar, to be quite frank. All right, so I hope that makes sense. As the year draws to a close, if I do a year-end review of my trading performance, do I do that? Not year-end per se, and great question, because I'm doing it throughout the year using whether it's Wingman Tracker, whether it's Trader Sync, whatever it may be. I'm monitoring throughout the year because, excuse me, I'm monitoring throughout. Yeah, I have a nasty cough. Sorry about that. I'm monitoring throughout the year how my performance has been. And so at the end of the year, it's really more of a mindset check than it is my performance. Because, gosh, um, we have to check our performance, I think, at least once a month. Uh, we don't want to over check it every day. No good. Every week, no. But we need to check it at least, um, once a month, once a quarter. So the process can't be end of the year. It's really too late, to say, gosh, what could I course correct? So it's really a mindset check than it is, how did I do this year? Because I really should have known far ahead of December 28 how it's been going. So I hope that makes sense. Terrific question. Terrific question. And just like that, um, yeah, and just like that, it is at the end of our show. I'm going to head on over to the uh, Simple Futures Room. I'll be logged into the Sector Secrets Mastery as well. My apologies for not getting to all the questions, though, but definitely get them in early. I know a lot of you do, and I'll definitely try to rip through these questions a little bit quicker tomorrow. So if I didn't get to them, we'll be right back at it tomorrow at 9. Thanks, as always, for being here, and I'll see you tomorrow. Be good to each other.